So we've seen the e-commerce trend really impacting the industrial market to a great extreme. We've seen the absorption and the amount of deals done by e-commerce companies really grow. 40% of all the transactions done last year were e-commerce companies, so it's a huge driver, especially here in Southern California.
The most important driver impacting real estate in the foreseeable future, in our view, is the fact that this expansion appears to have legs. We've seen economic expansion to the tune of 21 million jobs being created with very little inflation, and that low inflation level is allowing the Fed to be patient once again, contrary to what they were messaging about a year ago. And that gives the economy more room to run in our viewpoint. Job growth will probably slow in 2019 and 2020, and the chances of recession increase simply because of concern about a self-fulfilling prophecy. And hopefully we'll get through any kind of a slowdown without it becoming bigger than it should.
I think the biggest driver today and over the next 12 to 24 months is going to be the performance of technology companies. I think that, over the last few years, those have been the primary driver of our economy. I think that that's also driven commercial real estate, and I think if that sector continues to do well, we will. If that sector stumbles, it could be tough sledding.
I think the biggest driver is going to be tenancy and whether our economy keeps going and whether there's still expansion. I also think within that, I think people still haven't figured out exactly how they want to use office space in this 21st century environment. There's going to be this pressure of people needing to expand, we hope, because the economy is strong, but then what their footprints are going to be. And as long as the economy is good, I think the real estate market will stay very strong. If we start to see a hiccup, I think we'll see a downturn.
The biggest challenges for real estate investors in the next 18 to 24 months will be the process of decision making. Because we are late in the expansion and because values have gone up quite a bit, the concerns about what the recession may or may not do to values when it eventually appears seems to be on a lot of people's minds.
Clearly there's some diverging points of view on what to do on a social basis and an economic basis. One thing that happens is as we get closer to the election, people will get nervous about what's going to happen.
So as industrial becomes the new retail, and retailers are trying to figure out how to repurpose space, especially big box retail, I think one of the challenges is coming up with creative ideas on how to reuse retail space and malls, because I think that the way people are shopping and the way that people are looking at retail has really changed.
I think the challenges we're facing are things that are outside of our control. They're very big macroeconomic issues. I think we're going to have a presidential election, and that in most years you'd say things are just going to slow down a little bit and be normal, but who knows?